In this video, we'll be discussing conceptual framework, um, but only the elements of financial statements. So we've got 5 elements of financial statements. Number one, we've got assets. Number two, we've got liabilities. Number three, we've got expenses. Number four, we have got income. Number five, we have got equity. So these are the elements of the financial statements. All right. Number two, you need to be able to define all the elements, or you need to be able to know all the elements of the financial statements. I mean the definition. All right, so we'll start with the first one, which is asset. So what is asset? Asset is the present economic resource controlled by the entity as a result of past event. And then it further explain what is a economic resource. An economic resource is a right that has potential to produce economic benefit. So that's the definition for asset. Then liabilities. What is a liability? Liability is a present obligation of the entity to transfer economic resource. Then you explain what is a present obligation. So a present obligation is a duty or responsibility that the entity has no practical ability to avoid, right? Yep. Then we have got expenses. So what is the definition for expenses? It says decreases assets or increases liability that results in decrease in equity. Other than those relating to distribution to equity holders. So that's the definition. Then the last one, the second last, it's your income. So the definition for income, it says it increases assets or decreases liabilities that results in an increase in equity other than those relating to contributions from equity holders. So these are definitions that you need to know. And then the equity, they won't really ask you questions on equity. So number one, you need to know that we've got 5 elements. Then you need to be able to define all these elements. So you define them based on these definitions. So these are the definitions. And number 3, you must be able to do application for all these definitions based on the scenario that is given to you. So let's start with asset. So when you need to understand the definition. Number one, you need to understand that it's a present economic resource, right? Which is what? Which is controlled by the entity. So from that definition, it means that you must be able to control it. And then second, the last thing is that which results in the past event. When did the transaction happen? That will be a past event. And then you need to further explain what is an economic resource. So an economic resource is a right. So number one, we must have a right to use or to receive from that particular asset. Then this right, it's a right that has potential to produce economic benefit. So it means that from this asset, it must be able to produce economic benefit. It means it must be able to generate the money for you. That's the whole definition of the asset. Then we go to the liability. Then number one with liability is that it's a present obligation. So we're obligated to do something of the entity. Then to do what? To transfer economic resource. Then they explain what is a present obligation. It's a duty or responsibility that the entity has no practical. So number one, it's a duty or responsibility that the entity has no practical ability to avoid. So they can't avoid it, right? So you don't have a choice. You don't have an alternative. You need to pay. Then now we have got expenses. So your expenses, it's either the decrease assets or you can have expenses that increases liability. So it must fit one of the two. That results in decrease in equity, right? So your expenses they always decrease what? Your equity, if you remember the accounting equation. So this is what you're going to apply. And then these expenses won't be related to the distribution of the equity, right? Then we've got income. Income, they increases assets or they decrease liabilities, one of the two. And then if your assets decrease or your liabilities, if your asset increases or your liability decreases, it means that your equity will decrease. So these are the definitions, right, that you need to know. Number 3, you need to apply. So number 1, we will deal with assets. So when you're given the information or a scenario, how do you apply? Let's say you believe that that's something, it's an asset. So step number 1, you need to identify the issue. So this is your application. Identify the issue. So the issue, you'll always find it from the question, right? They will ask you if certain things should be recognized as an asset or not. Step number 2, you provide definition. You need to provide the definition of that particular element. Step number 3, you do an application of the definition. Then step number 4, you do recognition criteria. And then step number 5, you do conclusion. So on your conclusion, that's where you state if something should be recognized as an asset, liability, or anything, right? So this whole thing, these are the steps that you use whenever you apply, you answer the question. So step number one, you identify the issue. Step number two, you provide the definition of the element you believe they are talking about in the scenario. Step number three, you do the application of the definition. I will explain how do you do the application. Step number four, you do the recognition criteria, or we have got two elements there. Then step number five, you do your conclusion. Right? Right, yes. So now let's discuss um, the recognition criteria. So when you deal with recognition criteria, the recognition criteria, there are two things that you need to discuss. Number one, it's a relevance. Number two, it's a faithful representation. So if you look at the slides that they gave you, you would notice that. So what is the relevance? What do you discuss here? Here you discuss the existence of the element. Here you talk about the value or the amount of that particular element. So here you should always indicate how much is stated in the case. Then here if that element exists or not. So these are the two things you would always have in step number four. You start with the relevance. So you must explain if the asset exists or not. Faithful representation, you check if the scenario has got the amount, then it discloses how much was estimated there. Right, so yep, that's what you need to know. In the next video, I'll be explaining the applications process of each and every element. What do you write? How do you write your definitions and all of that? I mean your application.